Hello and welcome. In this presentation, you will learn more about important information for LLCs. The information contained here has been prepared by Civitas Strategies and is not intended to constitute legal, tax, or financial advice. The Civitas Strategies team has used reasonable efforts in collecting, preparing, and providing this information, but does not guarantee its accuracy, completeness, adequacy, or currency. The publication and distribution of this information are not intended to create, and receipt does not constitute, an attorney-client or any other advisory relationship. Reproduction of this information is expressly prohibited. Only non-commercial uses of this work are permitted. In today's conversation, we will define what an LLC is, why it is beneficial, how to create an LLC, and important considerations when electing your federal taxation status. A limited liability company, typically called an LLC, is a type of business entity that combines the limited liability protection of a corporation but with greater flexibility and typically lower costs. In an LLC, owners are referred to as members, and the company is managed either by the members themselves or by managers appointed by the members. LLCs are a popular choice for small businesses, as they are relatively easy and inexpensive to set up and maintain. However, LLCs are state-level corporations, meaning that for tax filing purposes, LLCs must declare to the federal government how they will be treated for tax purposes. We will talk more about the benefits of setting your business up as an LLC later in this presentation. There are several advantages to forming an LLC. These include limited liability protection, variable tax status, and the ability to change federal tax status. Let's look at each of these more closely. One benefit is limited liability protection. The personal assets of LLC members are typically shielded from the debts and legal obligations of the business. In the event of lawsuits or financial difficulties, creditors generally cannot pursue the personal assets of individual members to settle business debts. Another benefit is variable tax status. One of the key advantages of forming an LLC is the flexibility it offers in selecting a federal tax status. Unlike corporations, LLC owners can choose how they want to be taxed for federal income tax purposes. By default, single-owner LLCs are treated as disregarded entities and taxed as sole proprietorships, while multi-member LLCs are taxed as partnerships. However, LLC owners can elect to be taxed as an S corporation or a C corporation by filing the appropriate forms with the Internal Revenue Service, also known as the IRS. This flexibility allows LLC owners to select the tax status that best suits their business needs and financial goals, potentially leading to significant tax savings. Finally, an important aspect of an LLC's federal tax status is the ability to change it as your business evolves. As mentioned earlier, LLCs can initially choose their preferred tax status, but they are not locked into that choice permanently. If an LLC's circumstances change or if the owners determine that a different tax status would be more beneficial, they can file the necessary paperwork with the IRS to update their tax classification. However, it's important to note that there is a limitation known as the 5-year limitation rule when changing taxation status. According to IRS regulations, an LLC can only change status once every 5 years. For example, if you elected to be treated as an S corporation in 2023, the earliest you could change status would be 2028. You can create an LLC by following these steps. First, choose a name. Select a unique business name that complies with your state's regulations for LLC names. Typically, the name must include the abbreviation LLC or Limited Liability Company to indicate its legal structure. Next, file Articles of Organization. Submit Articles of Organization, sometimes called a Certificate of Formation or similar document, to the Secretary of State or similar agency in your state. These articles outline essential details about the LLC, such as its name, principal place of business, registered agent, and management structure. Then, create an operating agreement. While not always a legal requirement, drafting an operating agreement is highly recommended for LLCs. This document outlines the ownership structure, management responsibilities, decision-making processes, and other important aspects of the LLC's operations. It helps clarify the rights and obligations of the members and can prevent disputes in the future. Obtain an Employer Identification Number, or EIN. Apply for an EIN from the IRS, which is used to identify the LLC for tax purposes. This can be done online through the IRS website. The EIN serves as the LLC's tax identification number and is necessary for opening bank accounts, hiring employees, and filing taxes. And finally, elect federal taxation status. LLCs can choose how they want to be taxed for federal income tax purposes. By default, they are pass-through entities. They can also elect S corporation status to potentially reduce self-employment taxes or opt for C corporation status for different tax planning opportunities. Single-member LLCs have the option to be taxed as sole proprietorships. By default, LLCs with one owner are treated as a disregarded entity. And as you just saw, an LLC can also opt to be treated as a partnership, which is called a multi-member LLC, S corporation, C corporation, or sole proprietorship if they are a single-member LLC. Here are the main options and what you need to know about each. We will start with single-member LLC, treated as a sole proprietorship. If your business only has one owner and has relatively low profits or your business operations are straightforward, sticking with the default taxation as a sole proprietorship might be the simplest choice. This option requires no formal election and involves reporting your LLC's income and expenses on your personal tax return using Schedule C. While this approach offers ease of administration and minimal paperwork, it may result in higher self-employment taxes for the owner as profits increase, and there's less flexibility in structuring income for tax efficiency. The pros are it is easy to understand and your business's profits and losses go on your personal tax return, so you don't pay taxes twice. However, there are cons. You'll pay self-employment taxes on everything you make, and it's harder to save on taxes. To do it, you don't need to do anything special. This is how it works unless you choose something else. Next is multi-member LLC, treated as a partnership. If you have one or more owners, the default tax classification is as a partnership. Under this structure, the LLC itself does not pay income taxes. Instead, each member of the LLC reports their share of the company's profits and losses on their personal tax returns using Schedule K-1. This option allows for flexibility in allocating profits and losses among members, which can be advantageous for businesses with multiple owners who have different levels of involvement or investment in the company. However, members will likely still be subject to self-employment taxes on their share of the LLC's income. Pros include flexibility in allocating profits and losses among members and avoiding double taxation. It also allows for special allocations of income and deductions. The cons are more complex tax filing requirements. Members will likely be subject to self-employment taxes, and there is the potential for disagreements among members regarding profit and loss allocation. To do it, no formal election is required. This is the default tax classification for multi-member LLCs. However, the LLC must file Form 1065, U.S. Return of Partnership Income, and provide each member with a Schedule K-1 showing their share of the LLC's income, deductions, and credits. Opting for S corporation status can be beneficial if your LLC generates significant profits and you're looking to minimize self-employment taxes. By filing Form 2553 with the IRS, your LLC can be treated as an S corporation for tax purposes. This election allows for potential tax savings since only the salary portion of the income is subject to self-employment taxes, while the remaining profits can be distributed as dividends. However, S corporation status comes with eligibility requirements, such as limitations on the number and type of shareholders, and entails additional administrative responsibilities like holding regular shareholder meetings and maintaining corporate records. The pro is it might save money on taxes because you don't have to pay self-employment taxes on all your income. However, it is more paperwork, and there are rules about who can own your business. To do it, you will need to fill out Form 2553 and send it to the IRS to choose S corporation status. Finally, let's look at a C corporation, Form 8832. If your LLC plans to reinvest profits into the business for growth or expansion, or if you have complex ownership structures or are seeking outside investment, choosing C corporation status might be advantageous. By filing Form 8832 with the IRS, your LLC can elect to be taxed as a C corporation. While C corporation status may result in double taxation, taxes paid at both the corporate and shareholder levels, it offers benefits like lower corporate tax rates and flexibility in structuring compensation and benefits. However, there are additional administrative requirements associated with C corporation status, such as holding annual shareholder meetings and adhering to corporate formalities. The pros are you might pay lower taxes, and there are some ways to manage your money that could save you even more. But you might end up paying taxes twice, once on your business's profits and again on the money you take home. To do it, you will fill out Form 8832 and send it to the IRS to choose C corporation status. When you're deciding, think about how much money your business will make, who owns it, and what you want to do with the money. Regardless of the option you choose, it's important to know that you're not locked into that taxation status forever. As your business evolves and your circumstances change, you can revisit your taxation status and adjust accordingly. If your situation shifts, such as experiencing significant growth or changes in ownership structure, you can always update your taxation status to better align with your current needs and goals every 5 years. To learn more, contact a tax professional, business coach, or visit the IRS website. Free business consultations are available to help you strengthen your business. Experienced business consultants are available, at no cost to you, to help you focus on your business goals and to stay accountable to what you want to achieve. Use the QR codes shown here or visit indianaspark.com/civitas for more information on this and other useful resources. And be sure to visit the Civitas Strategies YouTube channel for more valuable resources to support you and your business.